Hey everyone, welcome back to the Mark Loeffler Experience. We have friend of the show, Andrew Hines, back, and today we're going to be making our predictions for the rest of 2022, what's to come, what we feel is going to happen, what some of the indicators are that we're going to be looking at, what could throw off our predictions, good or bad, and yeah, that's what we're going to do. And as always, this video is brought to you by Gitano Loeffler Realty Services. If you're looking to buy a home, sell a home, or invest in real estate in Southwestern Ontario, give us a call. Or if you're looking to buy apartment buildings out in Edmonton, I'm happy to help you out there as well.
Awesome.
Yeah.
Thanks for having me, Mark.
Oh, my pleasure. And if you guys haven't, Andrew has one of the top rated podcasts in Canada, so you should check him out, download it off Apple, or he does post it on YouTube as well, but I think Apple's your big go-to, right?
Yeah, mostly a listen platform, Spotify too. Just search the name Andrew Hines, you'll find it. Real estate focused. Yeah, so it's been an interesting year. I know last time we were talking about this, and it was a whole bunch of ifs. What if they increase interest rates? Obviously, they've increased the overnight rate a lot more aggressively than I initially thought they would.
Yep.
Knowing how fragile our economy was to begin with, obviously my assumptions about what real inflation actually was versus what they're admitting to. So you mentioned something interesting on one of your previous videos about lagging indicators, and it feels like we've got kids smashing buttons in an office here when they do these changes. They look at what they see today, not realizing that the past policy changes that they've made are still playing out.
Yeah, that's for sure. Well, and you talk about just interest rates, right? Like obviously we didn't expect 1%. Like I think everybody had bargained in 0.75. I think we're going to see half to another 0.75 come September. But the biggest thing is the long-term bond market, which is what fixed rates are derived from. They're pricing in a recession.
Right. So they acknowledge that the recession indicators are there.
Yeah, like they've come down 20% since their peak.
So that helps at least a little bit for the real estate. I mean, but you can't, if you look at the trend line in most of our markets right now, like you said before, we're almost back to year over year even. So everything, we went up and we came right back down, and it looks like we're trending down further. That means this effect is still playing out of the previous interest rates. I think even if they wait, when's the next interest rate increase?
September.
So we're still going to be seeing the previous effects playing out, and they're going to add that to it. I mean, we could see a return to 2019 pricing.
Wow. So I mean, because I looked at that, and that would be, what did I say? Like about a 55% drop? Because we're at 25 to 30 depending on the market in Ontario. Like I'm not, let's premise this.
Yeah, we're really focused on Ontario here. Yeah.
That in Alberta, that's just not the case because they didn't have a huge drop in prices, so they are down like 1% month over month. Vancouver, to be honest with you as well, which I thought would have been one of those markets, it's not really that off. I mean, they have this big scary indicator that they've had their worst month ever, or second worst month ever, but they were down 2.4%, where, like Ontario regions are down 5% month over month. But I guess, they had 10% increases in February and January and February.
Yeah, the whole what goes up must come down kind of thing. I think it was logical to assume the markets that had gone up the most were going to come down. Now Vancouver's one of a little bit of an outlier, but it wasn't going up as aggressive as Toronto was.
It 100% wasn't and Toronto wasn't as aggressive as like Barrie or Windsor or Hamilton, Niagara, those types of places. It wasn't as aggressive. Like they didn't see that, like Bancroft up 50% year over year. Like that's ridiculous. Right?
Yeah. For me, my comfort zone's always been like which place has been going up unreasonably the most, like for the longest. I want to just stay away from there because you kind of have to assume that at some point things have got to normalize.
Well, that was my bet on Alberta.
And that's why I like that market too, and that's why I like the Southwest Florida market, because it hasn't been crazy for as long, and that's why I've invested there. So that's the logic there. So now when we're looking at this market, what's going to happen? I think we're about to have a whole bunch of really cool opportunities here.
I agree. So saying that, we're back to even for the year. No, we're back to even year over year. Yeah. So basically we're at August pricing now. So we're at September mostly, but we'll be at August soon. I think we still have probably another 10 to 15% to go down.
You know what? That would be just, in my opinion, if they let the existing interest rate hikes play out. If they do another one, I think that
they're definitely doing.
Yeah, then we're going to push it down even further.
So, are they pushing us into a recession?
we're already there.
Well,
I think.
U.S. is.
Yeah.
Canada, not so much. Although the jobs report came out and we lost jobs again this.
Yeah.
Like we've lost jobs for the last 2 months. And in high wage industries like tech, like services, we're losing people there. But we lost it in healthcare. But you hear about shortages in healthcare.
Mm-hmm.
So is it just people don't want to work there anymore, and then they can't hire anyone?
That's the funniest thing. Like even in my company for our campground, like just finding people to work. Like there are a lot of people posting jobs. I think some of the challenges are related to housing. Like these people don't have a place to live.
Mm-hmm.
But it's an interesting recession concept right now, because we obviously that discussion's up for this. It's up right now. So are we in a recession? And usually in a recession, you don't have all the open available jobs.
Wow.
People are just cutting jobs and there aren't people hiring. But there are people hiring right now.
There are people.
Yeah.
Just do those people who, like the 10,000 people who lost jobs at Shopify.
Yeah.
Shopify, they're all the same.
Too
right?
close, yeah.
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 Are they going to come work at your campground? Are they going to come work at my restaurant? Like,
yeah, there's probably a lot of that going on too, right? People are just so used to the conditions that we've had, and it might take some time for the market to come back around. And by the way, like anything we're talking about right now, I don't think this is permanent. Like I don't think the values can stay down, and there's a number of reasons why I don't think they can.
yeah.
But it could be a few years.
I mean, so okay, that's the question then. Is this the 2017 version where we had government intervention, prices ran up before the government intervention came in, prices came down after because everyone was like, or they basically pushed a whole bunch of sales ahead, and then it came back up probably within 6 months, 6 to 12 months.
It came back.
Or is it going to be like 1992 where prices didn't come back up till like 1999?
Right, and then inflation adjusted, it was even longer.
Yeah.
I think it could be closer to the 92. It's not going to be a 2017 version, I don't think, but somewhere in between probably. But I think when the recovery actually does happen, we're going to go higher and further out of reach than the prices have ever been. And the reason I think that is because we have X number of capacity to build new units in Ontario, which is now being cut back because a lot of developers are saying, you know what, we're a little concerned about the conditions right now, we're not starting new projects. So we've cut our output on new housing, but our immigration to date, there's no announcement saying that that's cut, and we already don't have enough housing for the people who are here. So the supply issue is very real. What we've seen obviously with the raising of interest rates is a manipulation of demand. It's manipulating demand downward, but it's not solving the real underlying issue. So that's why I think when eventually, Bank of Canada has been on record saying we're going to do whatever it takes to get inflation under control, regardless of recession.
Yeah.
And if they hold that stance, it could be a little bit, but then eventually they're going to have to allow these rates to come down. If you subscribe to the philosophy that they're going to act the way that they traditionally have, and traditional monetary policy would dictate.
Well, I mean that's their only tool.
Yeah.
Right. Like, and I think that again, I've said this number of times on the channel that they waited too long. They should have been raising interest rates this time last year.
Yeah, if they just hadn't. I never really understood why they went so rock bottom with the rates.
Well, their whole saying was they wanted the job market to come back, and I think that it was they didn't understand it. We probably didn't either. That it was fundamentally different. That it's a new job market rather than the one before COVID.
Yeah, definitely. I mean, the issue there as I saw it, is you lowered interest rates, trying to stimulate an economy that was actually forced shut.
Yeah.
We had businesses that were forced to shut. No matter what you do, the interest rates, it's not going to bring that job back because it's literally been closed from a legal standpoint.
Yeah.
I think that was it just never really made a whole bunch of sense. I mean, of course they can rationalize it any which way they can, but I don't think that was the proper response. The proper response, obviously, is we would have talked about then, and now would be opened up at the time. They should have opened.
Yeah. All right. So predictions. So housing market. Okay, I think we both agree we're going into recession.
Mm-hmm.
No matter what happens, we're going to go into a recession.
Yeah.
Okay. So what's the housing market going to do in your opinion? I said I think 10 to 15%. I think that's going to maybe find a bottom. So I think year over year, we're going to be 15 to 20% down December to December. What are your thoughts on this?
I mean, I think that's a pretty safe starting point to talk about. I mean, whether we go further, that's the part that it really depends on how much impact the September or October increase. I think it'd be September, right?
Yeah.
Yeah. How much that affects prices further. It's a question of how long is it going to take, because obviously the sales process is long, from when people are thinking about buying to now changing their mind or thinking about selling. It takes time for this stuff to play out, and I just don't think they're giving enough time for it to play out. So I think if they do this right, there's a good chance we go beyond that 15%.
Yeah, because we're already seeing it. Like, I think we're seeing it in other industries. Like, I think obviously the retail market, like, sales are slowing, and the car market sales are slowing.
Mm-hmm.
Like, obviously the housing market sales have slowed tremendously,
So
right?
what are these people doing? Are they moving in with their parents? I feel like everybody's just multiple families moving in together, just trying to afford things.
Could be that, but I mean, rental prices are up 20% year over year, right? And that's not going to slow down. So
Right.
a lot of people are renting.
A lot of would-be buyers are renting right now, which is why Ontario could be such a cool opportunity. Make the best of an unfortunate situation for a lot of people. I think that we all have to have that mindset about it.
Yeah. I know you don't really do stock market, but what do you think? Like, just
Here's the thing, it all comes down to consumer sentiment, and I've always said that it would take an event that really stops people from spending. Is this that event? Is it enough to scare people? Are they going to feel like their retirement's really at risk? Because that contraction in spending has the ripple effect, the compounding effect of just compressing the market further and further.
Yeah, I honestly forget the number, but there's a number that basically says if the stock market goes down this, it takes $1 billion out of the economy.
Yeah.
That people will go spend because they're not going to go sell their stocks and go buy a car or buy a boat or buy a cottage.
Emotional, right? But that hurts the stock market more, right? Because the stock market is comprised of all these companies that sell these things. Now you're hurting all their top lines, all their bottom lines, all their dividends, all their stock values.
But I've always heard that the stock market is a forward-looking machine.
Mm-hmm.
So they're pricing in next year.
Next year, yeah.
So I would say that, I don't know. I'm buying stocks right now.
Yeah.
I'm buying long-term stocks to hold. I bought some Tesla. I bought some Meta.
Oh well, long term's a lot different.
Intel.
Right?
Yeah.
Long term's a lot different. I look at the long term, and if it's companies that are liquid enough to make it through hard times, buying at a discount is just logical.
Yeah.
They're eventually spending should return. I mean, if you look at previous recessions, eventually it returns.
Yeah. Well, I mean, again, the government puts in place inflation for a reason.
Yeah.
It's mandated that they want 2% to 3% per year.
Mm-hmm.
So it's going to happen.
Yeah.
Just not the 15, 20% we've seen. And I guess the elephant in the room is, what the hell is Russia going to do, and is that going to cause another spike to fuel prices, right? Because now fuel prices have fallen off a cliff. We're down 15, 20% month over month on fuel prices,
mm-hmm.
which then carries out into more things like fertilizer,
all of our goods now get a little bit cheaper,
shipping, all these types of things, right? So that obviously will take a lot of the inflation out of it, but again, there's that Russian factor to this whole thing too.
Yeah, so many variables that go into these things, right? We make these predictions, but you're predicting people, and that's sometimes hard to do.
Well, yeah, especially one as crazy as our good friend Vladdy. Anything else you want to leave the great people of YouTube with?
Buy on fundamentals. Buy on fundamentals. If you see an opportunity now, there are people right now that are looking to offload a house, and they're in a spot, and you could do them a big solid by paying them a price that works for them and really works for you. So it's a great opportunity time.
Don't be afraid to put in offers. If you think they're low balls, it doesn't matter. Just put them in. You never know what's going to get accepted in this world. You don't know where anybody's at. So we've been doing that a lot, just throwing in offers on stuff obviously we want, and then we're happy to pay the price we're paying, we're offering, but they cash flow like hell. They cash flow, and again, it's not short term, it's all long term stuff for us. Mm-hmm. Everything we're looking at is a 5 to 10 year window, nothing short term at this time.
Yeah, you really don't want to be banking on the short term. I talked to some wholesalers who are trying to get properties, and they're you want to get it 50 cents on the dollar, so that you can price in that prices are coming down. If it's a burr, or if they're flipping it or anything like that. So Yeah. Anyways, I think that about wraps that up.
All right. Well, thanks everyone for watching. Go check out Andrew's podcast, and definitely like and subscribe. Throw a comment down below. What are your predictions for the future? Thanks everyone. See you soon.